Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis session where we're going to be looking at one of the world's most traded assets. We're going to start off with the NASDAQ, but we're also going to be looking at gold. We're going to be looking at the US dollar, major currency pairs. We're going to be looking at oil, and we're going to be focusing on today's CPI announcement. So what has actually been released in terms of the US inflation figures, both in terms of the monthly figures, the yearly figures, core CPI figures as well. And we're going to be looking at how that is going to influence the financial trading markets, in addition to what has been happening yesterday and also over the weekend as well. So we have to remember, ladies and gentlemen, that the weekend and yesterday triggered a lot of volatility. I mean, we've still got 15 minutes until the announcement is about to be made. And, if we go back to yesterday's trading session, you can see the level of volatility. I mean, here was at 10 o'clock local time, where the US Secretary Scott Bessent announced that they will be reducing tariffs, and also that China will be reducing tariffs. And we had that massive amount of volatility. I mean, if we measure this volatility just in the few minutes after that announcement, it's 1.75% up. That is a lot of volatility in a very short period of time. And if you're looking at the market opened on a price gap of 1.5%. So we're looking at a lot of volatility. People should be aware that that will continue to influence the market today as well. Even though we're going to see a lot of investors' attention shift towards the CPI, the PPI, and also information from the Federal Reserve about whether their scenario and the way they view the market and therefore guidance is now going to change, that there is a trade deal between the US and China. Now, even though the title does state, if we're going to see an alliance from inflation, if it's going to support the US dollar or if it's going to support gold, we have to also keep in mind that the assets which are seen the strongest trend and also the clearest trend at the moment is actually the NASDAQ, the S&P 500, and oil as well. So we have to also take that into consideration. But what exactly are we going to see released today? For those traders that have joined today's session that have never traded before potentially, today we're going to get a major announcement. The announcement is related to the US. So we're going to see the CPI, which is basically inflation, and we're also going to see the core CPI. Now, on our calendar, the core CPI is stated as the consumer price index X, so basically excluding food and energy. Now, some people may say, why does this indicator exclude food and energy? Because when we're looking at the CPI, the consumer price index, it's basically when economists are looking at the index and they're determining inflation from the price alterations on that index. Now, the index itself is basically a basket of goods and services. Now, that includes, of course, certain food products, that includes pharmaceutical products, that includes alcohol, drinks, rent, property. It includes a lot of different services and products. Now, some of those services and products are quite stable in terms of their pricing. Some of them tend to be traditionally very volatile. Those very volatile assets, goods, tends to be related to food and energy, okay? So that's one of the reasons we have the standard CPI, which is going to be released in 10 minutes time. That includes everything within the CPI basket of goods. And then we got the core CPI, which again is still used as inflation, but it is excluding any product which is related to food or energy. So those are two major announcements. Now, I've already stated one of the assets which is seeing the most volatility at the moment, and we'll come back to this calendar where we get the announcement itself. Like I stated, one of the assets which is seeing the most volatility is actually assets such as the NASDAQ, such as the S&P 500. For example, here is the NASDAQ, ladies and gentlemen. Now, if we look at the last 2 hours, we're trading above all of our moving averages. Moving averages are all moving upwards. We're trading very clearly above our regression channel here, which is basically these three moving averages, which together form a regression channel. We're clearly trading above that as well. And we have been doing so for 2 straight hours. In those 2 hours, we've increased 0.5% up. And keep in mind, normally when we're about to get an inflation announcement, we tend to see two things, either a price range or range-bound trading conditions, which is understandable because, of course, we're about to get a major announcement. So a lot of people are staying out of the market. Both sellers and buyers are staying out of the market because they want to see what is announced. And we tend to get that sideways price movement or that up and down price movement. That's also possible as well. We're not seeing that today. The reason we're not seeing that, ladies and gentlemen, is because of what was released a few days ago. We've got to keep in mind, 2 weeks ago, we had very positive announcements in regards to Indian and US trade policy agreements. That definitely looks like it's about to take place. Maybe slightly delayed because of the conflict between India and Pakistan, but that's almost 100% likely to be agreed and penned. Then last week, we also had the same from the UK, which is another major announcement. And then the biggest announcement happened over the weekend and yesterday. Over the weekend, we had Scott Bessent, which again is the US Secretary, one of the key members of the Trump administration. He came out and said they finished 2 days of talks. No further talks are required. They were very positive that they had made an agreement, but over the weekend, we didn't know what the actual agreement was. Yesterday, 10 o'clock, he came out and he confirmed what the agreement was. By the way, ladies and gentlemen, I can see somebody's asked a question. Just so everybody's aware, if you do have a question, you're more than welcome to ask questions, and I will answer them live on the webinar, on the live analysis. So somebody here has asked a question. What was actually announced in terms of the trade? He's misspelled it, but I'm guessing he's referring to the trade policy from yesterday. What was announced? Previously, the US had 145% trade tariffs on Chinese imports. The Chinese had 125% on the US. Okay, basically extremely high taxes, and nobody was ever going to trade based on those tariffs. There was an agreement for China to reduce it from 125 to only 10%. Only 10%, ladies and gentlemen. And the US also agreed that they will reduce theirs from 145% to 30%. So we're talking about significantly lower than that which was previously expected. Previously, it was expected that the US would only be willing to reduce their tariffs to between 50 to 60%. That was what was previously advised. It's significantly lower than that. If we look at 60%, what was actually agreed was 30%. That's less than half. That is something very good for the stock market because it increases supply chain security. It increases the investment sentiment and risk appetite of the market. And we also need to keep in mind that because of that, the projections which have been provided by economists and analysts, which were as high as 50% for a recession, have significantly reduced as well. So investor confidence is also massively increasing. This is why we're getting, as we're approaching the opening of the US session, such a strong upward price movement. Now, some people say sell gold. Another person here is saying buy gold. Keep in mind, this is massively going to depend on what is actually going to be announced by the CPI. Because what is gold being used for? Gold is being used mainly for 3 things. Gold is being used as a safe haven asset, okay, which at the moment potentially is less needed based on the latest developments within the market. Let's actually go to the price movement of gold, ladies and gentlemen. I'm going to go on a 30-minute time frame. So you can see as I'm announcing it and I'm changing the chart, you can see that downward price movement. Also the downward price movement today. Look at this downward price movement right here. So based on the latest developments, there's definitely a lesser need for safe haven assets, because the risk and projections related to a US recession is significantly lower at the moment. That, of course, can change going forward. In addition to this, we're going to have on Thursday, for the very first time, the Russian president and the Ukrainian president negotiate directly together in Istanbul. So that's also something else we need to take into consideration, because if that bears fruit, okay, and just the fact that they're negotiating is slightly positive, but if that's going to bear fruit, that will significantly improve, again, the risk appetite of the market because of the geopolitical factor. President Trump has also advised that if it would help, he potentially is going to be included as part of that as part of those negotiations as well. So that's another positive factor, ladies and gentlemen. The last thing is, of course, interest rates. Now, interest rates is massively going to be dependent on today's inflation figure. Inflation in the US at the moment is 2.4%. The Federal Reserve's target is 2%. It is believed, okay, this is the projection, this is the expectation. It's not necessarily 100% guaranteed. The market believe at the moment inflation will remain at 2.4%. Now, whether we're going to get an interest rate cut or not is also going to depend on what's announced by inflation. If inflation is going to come in at 2.6%, which is significantly higher, then at the next interest rate decision in June, there's almost definitely not going to be an interest rate cut, even though that we've seen a Chinese-US trade policy agreement. Whereas if we get inflation coming in at 2.4%, which is very close to the target, is also significantly lower than the previous months, or even better, if we're going to get the inflation come down to, for example, 2.3%, which is only slightly lower, but it's the lowest that we have seen in many months, and it's more or less at the target set by the Federal Reserve and the Federal Open Market Committee. Now, if we're going to get interest rates declining because of lower inflation, then potentially actually gold may slightly retrace back upwards. It doesn't necessarily mean, ladies and gentlemen, it's going to increase to 3,500 and it's going to go to an all-time high, because there's a lot of factors which is also given a bias that actually gold is less needed and potentially that should be reducing in price slightly. But if we're going to get interest rates decline potentially, then actually this may retrace. A lot of people are going to say to me, if it's retracing, what are the support and resistant levels that we're going to be looking at? In terms of the current resistant level, the key resistant level is always going to be our trend line here. So we've got a 200 bar simple moving average. Of course, that will continue to decline even if it starts to move upwards. So it's going to be more or less around there. So resistant level potentially around $3,300. That's potentially at the moment. It depends, of course, on the CPI announcement, and it depends also on what the Federal Reserve will announce after that, because of course Thursday afternoon we will have the chairman of the Federal Reserve, a gentleman known as Jerome Powell. He will announce his interest rates expectations and forward guidance as well. So a lot of people are saying buy gold, sell gold. It's going to massively depend. I mean, what we could do is we could also look at indications at the moment. If we're looking at indications at the moment, we're trading below the 200 bar exponential moving average. We're trading below the regression channel. All regression channel moving averages have crossed over downwards. So we've got a lot of expectation here and some bearish bias as well that the price will actually continue to move downwards. If we're going to decline below this level here, then actually that signal is starting to materialize and starting to strengthen. So if we decline below that level, that's one potential signal. In regards to retracements, though, bear with me, because if we are going to get a retracement, if we're going to follow wave theories, could be anywhere between 35 to 65%. So if it's going to increase above 65%, basically here, if it's going to go above that level, which is 65% of the current impulse wave, if it increases above that, then actually that bearish impulse wave and that bearish bias actually starts to fade away, because we've increased above 65% momentum of the impulse wave. We're trading at that point above the 200 bar simple moving average again, and we also will be trading within the regression channel. So that sell trade and that sell expectation starts to fade. But again, that's a big if at the moment. So we've just got the announcement, ladies and gentlemen. So let's look at the announcement. I'll share my screen. Like I said, a lot of people believe that inflation may potentially decline. Okay, so here's the announcement, ladies and gentlemen. Hopefully everybody can see on their screen. This is HFM's calendar. Now, on a monthly basis, it was expected to come in at 0.3%, came in at 0.2%. That's lower than expected. Core CPI as well, so core inflation, again came in lower than expected. Now, if we're looking at the yearly figure, so basically inflation in America, this is big news, ladies and gentlemen, very big news. Inflation in America has declined again. Okay, so we're looking at consecutively month after month, inflation is declining, has declined from 2.4% to 2.3% as well. And as expected, okay, so not triggering a lot of volatility, the core CPI figure has remained unchanged. That's neither something negative nor is it something positive. It is still too high, but as long as that's not increasing in value, it's not necessarily something negative, especially when inflation itself has significantly declined. Now, if we're going to look at inflation, just to give everybody a real understanding of how low an inflation figure of 2.3% is. This is inflation over the past year. Okay, over the past year, we've never had an inflation figure of 2.3%, like which was just announced 60 seconds ago. The lowest we have ever had is 2.4%. Very low. If we're going to look at the 3-year figures, you can see exactly how low it is. Now, like I said, if we're going to get a lower inflation figure, then that could potentially be something which is very positive for the stock market. Look at what's happened to the stock market. Now, I haven't announced that and confirmed that, ladies and gentlemen, when inflation was confirmed lower, and I've looked at it on the chart, I confirmed that 20 minutes ago. If inflation is lower, ladies and gentlemen, there is a lot of positive for the stock markets, because we have to take into consideration that earnings reports were generally very positive. Yes, sometimes after earnings announcements, we saw certain stock prices fall, but only because they gave a negative forward guidance, which was based on the trade war and trade tariffs, which is now irrelevant because most major countries, other than within the European Union, have made an agreement or are speculated to make an agreement with the US. So that forward guidance is no longer something which is, should we say, accurate or relevant to the market, but earnings data was extremely positive. Inflation has declined, which supports consumer demand. Potentially, that's going to trigger lower interest rates in June. If it's not in June, then at very latest to be in July. I'll actually show you what their current expectations is in regards to that as well. But look at this upward price movement, ladies and gentlemen. Since that announcement, we're looking at a further upward price movement of 0.38%. Of course, it's retraced slightly now, ladies and gentlemen. We are going to see that retracement. That retracement is not necessarily something to be worried about. When we get announcements like these, we of course get those up and down retracements. Now, if somebody didn't have their pending orders in place, and we should always have pending orders if we're expecting a lot of volatility. If you're looking at the candlestick in terms of the candlestick like this, so we're looking at the open and the high, or what you can do is you can look at the close of the previous candlestick, so just before the announcement, and the high, we can see where 60% momentum is being regained. So 60% is there. What we do want to see is, we want to, of course, take advantage, if we can, of that upward price movement if the market allows us to do so. But we, of course, don't want to be trading upwards where the momentum starts to build downwards. We want momentum to be regained. So momentum pack, if we look at 65% momentum being regained, it's at this red line here. That's where momentum's being regained. Now, somebody here mentions, because I can see this question, sometimes he says after news is announced, Sorry, I'm just reading the question very quickly. Yeah, okay, so this is a good point. He says sometimes after news is announced, we get that big shoot upward, but then the market will sell. It triggers a lot of take profits. Sometimes the price becomes overbought in the short term, and people cash in their profits, and it brings the price further down. He says when would be a better time, a good time to buy if the price is gonna trade lower. So, if we're speculating at this upward price movement, should we say, this entry point here where 65% is being regained, some people, they'll open a secondary trade if the price is going to decline. Basically, a secondary trade just to simply take advantage of the upward price movement, but at a better price. Because keep in mind, traders, they want to speculate upward price movement, but they want to do so at the lowest price possible. It's like, for example, somebody here saying buy or sell. The bias at the moment in terms of technical analysis and price action and momentum is more a bullish bias. Okay, so that's just very quickly to answer that question. I drew this red line and said it was going to be crossed. We just saw that being crossed, about 30 seconds after I announced it. I'll get rid of that red line because it's already just now being crossed. But if we're going to see a retracement, which is, can happen, even if we see a retracement to this red line, ladies and gentlemen, let's go to a 15-minute time frame. If we retrace down to that line, or if we focus on the 15 minutes, and we're going to retrace to the retracement, the regression channel here, that's still nothing more than a retracement, ladies and gentlemen. It's nothing more than a retracement. Now, for the short term, people may look to buy at that regression channel to basically attempt to buy the retrace at towards the end of the retracement. If people are looking more at a medium term, then of course they're going to focus on the 200 bar simple moving average, either on the 15 minutes or the 20 minutes, for example, like so, in which case it's going to bring it even further down or bring it down to here, or potentially they may look to do so on the 30 minutes. Okay, what I will say is if it's the 30 minutes, you're looking at quite a large decline. So we need to, think about, are we going to see such a strong decline considering that we're seeing positive earnings data, inflation's declining, potentially we're going to get interest rate cuts quicker and more frequently now that inflation has declined. So, are we going to actually see a decline of 3.5%? Again, that's down to you and your analysis. Somebody says, who else is enjoying this buy signal on gold? We spoke about that, guys. Let's go to gold. Let's actually go to gold on the 2-hour time frame. Here we go. So if you look at gold on the 2-hour time frame, let's get rid of these red lines here. There we go. Now, if we're looking at a 2-hour time frame, gold is actually trading below our trend lines. Okay, so even though lower inflation could mean lower interest rates, which is negative for the US dollar, positive potentially for gold, but like I said, there's other factors which is complicating gold more. So we're looking at de-escalation in the Middle East. We're looking at de-escalation between potentially Russia and Ukraine, lower possibility of recession. So there's a lesser need, should we say, for safe haven assets, and also people are re-increasing exposure to the US dollar. So, even though CPI is lower, interest rates lower, potentially that could have a domino effect onto gold. At the moment, ladies and gentlemen, we're trading on lower lows. So you can see a low, 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 low here, high, lower highs as well. We're trading between 25 and 50, which is an area where sellers are controlling the market. We have no divergence there. We're still looking at convergence. We're trading below the trend line and trading below the 100 bar simple moving average as well. So in terms of technical analysis, it's giving us an indication of downward price movement. Now, if we're going to see upward price movement, because somebody says here, are you enjoying this upward trend? That he is enjoying this upward trend. If maybe he's on a very small time frame, let's go to gold. So I can't see that upward price movement at least being maintained. So we've got that spike upwards. It's retracing, hasn't really gained significant momentum. But let's say, for example, we start to see momentum gain upward for gold. First of all, we need to be cautious of this resistance point here, okay? So that, in terms of the short term, may be potentially where we need to be cautious about in terms of resistance. But let's say we're going to break above that. If we break above that, then we've got a bullish breakout. That probably will be enough momentum also to push the RSI back above 50. Now, if we're going to see that, if we're going to see a bullish breakout, we're going to see bearish price action gain momentum, we're going to see above 50 on the RSI, then of course we start to see slightly a change to the neutral level in terms of technical analysis. Not necessarily a buy signal, but going from sell signals to the neutral signals. Now, if we are going to see that, the first target based on technical analysis will always be the trend lines. So for example, here when we were trading below the trend lines, but then it moved upwards, you can see it went to the trend line and then just declined again. So at first, just so everybody's aware, at the very strongest price movement that we may see in terms of targets, our trade targets, will of course be to the trend line. And then as we get closer to that, we can look to potentially adjust that if there's certain developments in the market which is going to, should we say, confirm and support the signals which are being provided. Otherwise, ladies and gentlemen, if we're going to see downward price movement, then of course we've got our support level here. Now, in terms of our support level, just so everybody's aware, a lot of traders, they don't necessarily put their target at the support level itself. So, for example, the support level and the retracement is 1.80%. Now, somebody may aim for 75% of that, ladies and gentlemen. 75% of that is approximately 140. So 140 is here, ladies and gentlemen. So rather than aim at that support level all the way down here, which may trigger traders to start to actually buy, you may miss out on that price movement. A lot of traders will aim for this level here. So that's 75% of the price movement towards the support level. So that's in regards to gold. Now, in regards to currencies, ladies and gentlemen, what's the best performing currency? What's the worst performing currency of the day so far? I'll confirm that now for you. Sorry, just having a quick sip of my coffee. So best performing currencies of the day at the moment are still the Australian dollar, New Zealand dollar, and Swiss franc. The worst performing currency of the day at the moment is the US dollar. Of course, we have to keep in mind that inflation was significantly lower than previous expectations. But let's actually go to the US dollar. This is the US dollar index. We can see it's declining, ladies and gentlemen. Only thing we need to be cautious about, of course, is that we're aiming for those trend lines. So for example, look at this here, and this level here. It starts to decline. We get closer to the trend line, retraces. Starts to decline, goes to these two trend lines, goes back up. So we have to be cautious. If it declines to this level here, that it's not going to do something very similar again. So it's not going to decline, for example, to there, and then just very simply decline back upwards like this. So that's something we need to be cautious about. Now, if we do want to speculate that the price of the US dollar is going to increase in value for whatever reason, because the index, even though it's lower today, over the past week and a half, it's been on the upward trend. The worst performing currencies after the US dollar is at the moment the Japanese yen and the Canadian dollar. The Japanese yen over the past 24 hours has more or less been up and down. So at certain times it's looked very weak, definitely related to the movement in the bond market, but at certain times it has very quickly shot back upwards. Whereas if we're looking at the Canadian dollar is a currency pair that looks generally quite weak. So let's take a look at, on the 2-hour time frame, the USD CAD. Here we go, USD CAD. So attempting to move upwards again, ladies and gentlemen, we can see we've retraced, But if we're looking at 65% of the retracement being regained, it's at this level here, 65%, basically at that level. So if we're going to increase back above that level again, then of course we've got a potential signal that the price is going to increase. Let's go to 15-minute time frame. There we go. So if it increases above there, so not at the breakout, but just below the breakout, then again we may see an indication again of the price increasing upwards. So that's in regards to the US dollar against the Canadian dollar as well. Now I've got some questions. I'll very quickly answer these questions. Somebody says here, how can you use risk as part of, okay, so you saw this as part of the a webinar he watched with us. How can you use risk as part of an indication? Risk and part of as an indication, you're either going to use in regards gold, analysis and evaluating gold, or the stock market. So it'll be one of those two most likely. And there's two ways that you can look at this. Let's go to, for example, the S&P 500 rather than looking at the NASDAQ, because we've already looked at the NASDAQ. Or we could even look at the Dow Jones as well. So this is the Dow Jones. Dow Jones trading above the 75 bar EMA, trading above the 100 bar SMA. We're trading currently at just below 62. We're trying to increase above 62 on the RSI as well. So all indications is giving us a bias of upward price movement. The only thing we want to see is, this retracement lose momentum and start to move upwards. So again, 65% we're looking at. If we increase back above that red line, then those buy signals will start to look stronger. Now, if we're going to use risk, we're going to use it in two ways. Of course, the only reason we want to know the risk appetite of the market is because, of course, if we're looking at a risk on sentiment and a higher risk appetite, then it's positive for assets, for example, such as the S&P 500, Dow Jones, ETFs, indices, indexes, even, for example, cryptocurrencies, which you may or may not be interested in. Of course, keep in mind, here at HFM, we're only trading CFDs, generally speaking. But anyway, if we're going to look at upward price movement, a lot of the time is triggered because the risk appetite of the market is improving, the risk appetite is high, and that triggers a higher demand. Now, two indications we can use to determine this. One indication, ladies and gentlemen, is known as the high-low index. So what is, for example, the Dow Jones? Let's go to the Dow Jones components. How is the Dow Jones determined in terms of the price? So if we go Dow Jones components, and we go here to Slick Charts, you can see the Dow Jones components here, ladies and gentlemen. So what you'll see is there's 30 stocks, okay? Now, there's different methodologies, okay? One of them is the high-low index. What will the high-low index do? The high-low index will look at these 30 stocks, which are within the Dow Jones, and they will say how many of those stocks are at a 12-month high, and how many of those stocks are at a 12-month low. Now, if there's, for example, 10 stocks at a 12-month high, and let's say 2 stocks at a 12-month low, then the index will show 80%. Okay, it will show 80% on your charts. Now, if it's above 50%, now there's certain theories. Some people say 50, some people say 60, some people say 65. It depends on the economist and the analyst. But of course, that's also slightly down to you on how you're going to use it. But anyway, if it's showing that the index is high, then it indicates that the appetite to the Dow Jones and to the stock market is positive. Another thing which traders can also do is look at what percentage of these stocks are increasing in value and what percentage are decreasing. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So less than 50% of the Dow Jones is increasing in value. Whereas if we go to the NASDAQ, ladies and gentlemen, this is the NASDAQ, okay? We look at just the top 10 most influential stocks. Let's look at only the top 10 because I don't want to look and count 100 stocks. Let's look at the top 10. Top 10, 70% are increasing in value. If you take top 15, again, 70% are increasing in value. So you can see if you want to speculate upward price movement in the stock market, there's advantages to doing so for the NASDAQ. And again, we're looking at the risk appetites of the market because you can use the high-low index, you can analyze the components itself, and of course you can definitely see that because there's a higher risk appetite within the market, the NASDAQ is doing better because it's mainly exposed to number one, growth stocks, and number two, stocks which do not pay dividends. Whereas if we're looking at the Dow Jones doesn't necessarily have a very high exposure to growth stocks. The only growth stocks actually which are in the Dow Jones is Microsoft and Nvidia, if I'm not mistaken. So we've got Nvidia here. And also the Dow Jones is very highly exposed to defensive stocks, which do well in a low risk appetite of the market or neutral market conditions. Whereas because we're looking at risk on and a lot of demand for the stock market, then very clearly we're looking at the NASDAQ and even the S&P 500 benefiting. So you can use the high-low index or you can use component analysis as well. What traders can also do is look at the volatility index. Now the volatility index, I'm not sure if it's available. There we go. It's available on Google. So let's look at the past 5 days. It's declined by 28%. But the lower it is, the better it is for the stock market because it's saying the the fear in the market is declining. Whereas if it was increasing in value, it says it's indicating fear in the market is increasing in value. And of course, if you're holding stocks, you're not going to be holding them for very long if you're cautious and you're scared about a recession or if the company's going to go bankrupt or if your shares are going to decrease in value. Of course, if you think at any time they're going to decrease in value, you'll get out of the market. So this, ladies and gentlemen, is something very key that we can see definitely within the market. Something very, very key. So we have indications of positive price movements. We can see the VIX is decreasing in value, both over the past week and also today alone. This is today's price movement. We can see the high-low index for the NASDAQ is declining. Is increasing in value. If we're looking at components, now for the NASDAQ, if we're looking at the top 10 influential companies, or if we're looking at the top 15 influential companies, most of them are green. Now, if we're going to look at all companies that hold 1% weight and above, how many of those are increasing? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So that's just above 50%. Ideally, we would want that to be 60% at a very minimum. So there's a slight bullish bias, but not bullish enough for that to provide a bullish indication. But if we go to the S&P, the NASDAQ, we can see that upward price movement. We've had that bullish breakout. So we just need to be slightly patient and see how that develops within the market. Bear with me. Let's go to the 1 minute time frame. And we can see that NASDAQ here. So we can see it's declined to that regression channel. As long as it's remaining between the orange and the green, we still have a strong buy signal. If it declines to the orange to the red, we have a weak buy signal. If it declines below the red, then we're taking into consideration a correction. A correction could be to the trend line. Of course, keep in mind this is only a 5 minute time frame, or it could be to the previous range. Okay, so if we look at a previous range, it's approximately at this red line here. But at the moment, we're not looking at an indication of a correction. at the moment. Something really big for the stock market, both the NASDAQ, S&P 500. Let's look at the S&P 500. Looks very similar to the NASDAQ. And the Dow Jones is going to be on Thursday. I'll confirm what time as well. There's going to be a speech from the Federal Reserve Open Market Committee Chairman, Jerome Powers. It's going to be at 12:40 GMT, ladies and gentlemen. 12:40 GMT. Now, depending on your personal region, you have to amend that for your local time. He will definitely comment on inflation because he's been saying a lot that he's been cautious that inflation will increase in value because of tariffs. Now, tariffs are significantly lower. The outlook for the market looks particularly better. Inflation has declined again. It's the lowest that we have seen since before COVID-19. So, is he now going to have to start to take a more dovish tone? That's something we, of course, are going to look at. Before we start to look at the Federal Reserve, very quickly, let's look at indications for oil. Oil trading above both trend lines. We've got at the moment convergence here, but we are also between 50 and 75. So we have indications of upward price movements, at least only up to the resistance level here. Like I said, a lot of people may not want to trade all the way up to the resistance. For example, the resistance is 3%. Some people may want to only look at, for example, 70% of that, which will be approximately to this level here. So 70 to 75%. So a lot of traders may exit here. But keep in mind, this is a 2-hour time frame. So for short-term traders, that's more than enough price movement. So before we end today's session, let's also look at what is the market's expectation for interest rates. Now, here we've got the Fedwatch tool. It is provided by the Chicago Exchange. So it's provided by the exchange, stock market exchange itself in Chicago. The next interest rate decision will be on June 18th. After that, it will be on July 30th. Now, of course, at the moment, most of the market believes that there's going to be a pause next month, okay? But what you will notice is in 33 minutes time, where the US market opens and this will amend itself, you will notice that this will decline and this will increase in value. Now, depending on how much it declines by, okay, if you're going to start to see it significantly decline, okay, and it starts to increase in value. What do I mean by significantly? For example, if this is going to drop to 85% and then maybe 80%, this starts to increase in value. If that starts to become the scenario, then of course that will significantly further support the stock market. Now, if we see no change, if it's going to remain at 91% and just above 8%, then when we go back here to the S&P 500 and to the NASDAQ, we need to be cautious of upward price movement. Okay, we need to start being slightly more cautious, at least for the short time. Of course, that may change when the Federal Reserve announces, the Federal Reserve on Thursday, Mr. Jerome Powers conducts his press conference, because he, of course, will look to provide forward guidance and clear up those factors. Somebody says CPI has already been announced. Correct. Yes, it has been announced. CPI, ladies and gentlemen, and inflation has been confirmed that inflation has declined from 2.4% to 2.3%. So lower than expected. It's known to be positive for the stock market. So far, it has been positive. And it's also known to be positive for oil. And that so far has been positive for oil. Now, in terms of the US dollar, we saw a lot of mixed price movement. At the moment, though, that's starting to provide a more clear price action downwards, you can see here. But before that, it was more sideways price movement. If we're going to follow traditional economics, it's something which is negative for the US dollar, at least in the short term. So, ladies and gentlemen, that's the end of today's session. Do we have any questions, ladies and gentlemen. I'll be more than happy to answer any questions. Keep in mind that we have many trading accounts. Some of our trading accounts have zero spreads. A lot of our trading accounts have no overnight fees for a limited period only that you can take advantage of. And also, we have a trading account which have ultra low spreads as well. So you can opt to trade with it within the zero spread account, where you're charged a small commission, or you can not be charged a commission and go for our pro account, in which case we're looking at spreads which are significantly low, extremely low, and you can take advantage of our period that we give you, where you can trade with no overnight fees, which is absolutely amazing. But trends that we have seen develop, ladies and gentlemen, very clearly is very clearly showing a strong, clear direction. And also keep in mind, if we go to HFM's website, keep in mind that we have analysis every single day. Okay, if you go to our articles, if you go to tools and education, go to news and analysis here, this is an article from yesterday. This is an article for today. And of course, these always provide signals. For example, look at this. You can see reconfirmed signals provided by Goldman Sachs, provided by internal analysts. There's analysis on multiple assets provided every single day. If we look at what's been announced today, it's exactly what was confirmed this morning. So let's end today's session. Enjoy the rest of your afternoon. Good luck to everybody that is trading. If you need any assistance from us, feel free to get into contact with our support team or our educational team. In the meantime, enjoy the rest of your day. Hopefully you found today's session educational and informative. And goodbye. Take care.